first part of October, our models are indicating could be problematic for the overall markets, just on a trading basis, not on a longer-term secular bull market basis, which we think we're in.
Well, that's something that we need to hear from you, I guess. So what type of, if we fail, what you just said, and that's becoming like maybe more likely, maybe it's 50-50, but if we don't, then are you looking at 5, 10%? What on the S&P would be your downside objective?
I don't think you're going to get a big downside move here. I think 5 to 7% would be it because we're coming into the strongest part of the year. I think a lot of the noise out of Washington, D.C., where I used to live, is just that, noise. And we're having a really good year at Capital Wealth Planning. I mean, last time I looked, we were outperforming the Dow Jones Industrial Average. We have about 90% upside capture and only about 65% downside capture. So despite the machinations of the trading of the markets, the long-term investor's doing pretty well here.
We're going to have one of your, not a cohort, but I don't know if he's a competitor really, just another individual that tries to figure all this stuff out with us, Jim Paulson. He says a lot of the economic numbers have actually been getting better. And instead of being in the low quartile of the of expectations, they've been in the high quartile. And that sometimes means that earnings are getting ready to reaccelerate. Would that surprise you in the fourth quarter or the first quarter?
No, that's exactly what I think. And Jim Paulson is a lot smarter than me, and I think he's got a good handle on the markets. He and I have been on your show before, and what I see is that the hard economic data is improving, and people are paying too much to the soft economic data, like consumer confidence and things like that. But the hard numbers, as Paulson points out, are improving, and I think that's very bullish for the markets longer term.
You have a question for Jeff Saut, or do you think that
always have a question?
Do you think that that earnings can be better than people are forecasting now, or not?
You always have that hope that earnings can be better.
Right, but what do you think?
Certainly. Listen, on a year-on-year basis, it's going to be difficult from the comps. But, Jeff, I guess the question I would have for you is going into the fourth quarter, it seems as though the growth names have moderated their advance. They peaked on July 26th. Do we need those growth names to once again outperform for the S&P to move higher in the fourth quarter?
Yeah, I do think you need growth to reemerge as a leadership group. And I will say, in my 55 years of looking at markets and 49 years in this business, Wall Street will always pay up for true growth, Joe. And I don't think it's any different this time.